Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Bob Yager, who's a senior energy analyst over at Mizuho Americas. Bob, it's great to have you back with us in studio as always. And we actually have some good news this month. Oil hitting 4-month highs on some pretty good data last week.
Yes, we a very good EIA storage report last week. Domestic production was down for the first time in 3 months. That's a big factor. That number has just been getting bigger and bigger and bigger all the time. Also, the rig count has ticked lower too, and that implies that the explosion of crude oil production in West Texas is maybe slowed and maybe even pulled back just a little bit.
All right, now what about the U.S. was saying, according to Bloomberg, that the oil market here or globally can withstand the removal of Iranian crude exports?
Well, yes, there will be price incentives to increase that production that has pulled back in Texas. If we were trading at 58.95 is the 4-month high from Friday. If we start trading $65, I'm sure we're going to see some extra barrels come on board. And we can ramp up production pretty quickly, I do believe, if we're incentivized to do so by price. Also, the OPEC folks have taken a lot of barrels off the market, specifically the Gulf states and in particular the Saudis. They could add barrels rather quickly, need be. There was actually a pseudo-OPEC meeting this weekend, and the Saudis were insistent on keeping the production cuts in place. Countries like Russia and Iraq, who are also two heavyweights, they implied that they were welcome to the idea of increasing production if those Iranian and Venezuelan barrels did go off the market.
It seems as if there's a global incentive to keep oil at a certain price as well.
Yes, that certain price is kind of where it is right now. We're talking probably 55, it's 60 for WTI, domestic crude oil, and $10 higher basically for international benchmarks. At those rates, the consumer is happy, the producer is happy, the refiner is happy. You move too far away from any of those numbers, then one of those three parties is going to be affected adversely, and they're going to react accordingly.
And last time you were here, we were talking about the divergence in the spreads between WTI and the other markets. Are you still seeing that now, or have they leveled out at all?
No, they've actually stayed pretty much the same level. It's basically about $9. The international benchmarks are more expensive than crude oil here in the United States. And that makes sense because the international benchmark is bid a little bit on the fact that OPEC has pulled back on production. U.S. crude oil, on the other hand, is relatively cheap because it's very well supplied by the production explosion in West Texas.
All right, now anything new with India?
No, it just does become a more and more bigger story all the time, though. I mean, they already have the largest refinery in the world, period. A lot a lot of find that surprising.
I was going to say, you wouldn't think of India as...
You wouldn't think, but the Reliant refinery in India is gigantic. It's a mega project. It's only a few years old. It's relatively new. But it gobbles up a lot of crude oil, and the demand from India as a function of that for basically Saudi crude or OPEC crude oil is supersized. Now, the United States is trying to get into that market. We actually have made delivery to India at this point, but it's a slow process. Basically, OPEC still owns that market. It's a big market, and it will only get bigger.
All right, so assuming things remain the same, kind of these are the levels that we'll be looking at going into. So now we start talking about second quarter and summer driving season coming up here.
Yes, and there's some very interesting dynamics involved right there. Gasoline demand is starting to take off a little bit. And gasoline was really beaten down about, just on January 30th, it traded down to a multi-year low. Crude oil versus unleaded gasoline. The price was at like $3.60 refiners are making off every barrel of gasoline. That's bad. It's up to $19 and change now, just like that, in 6-7 weeks. So yes, we are segueing into driving season. Demand for gasoline has exploded. I think that's fair to say. Storage last week went negative for the first time in quite some time. It went back to a surplus last week's report, but we haven't been deficit in a long time. And yes, there's actually signs that gasoline could be one of these issues that piles on the bullish kind of bandwagon here. So yes, it does look good.
All right, Bob, thank you as always for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.